you should see about a third of your deals lost according to price. And if it's below that, like you're probably priced too low. You should be seeing some pushback on pricing. If customers actively tell you how cheap you are, if you have demonstrable proof that you create a really good ROI, if you haven't touched pricing for a couple of years, it's probably those are all probably really good reasons for you to go forward.
Hello, everyone. Welcome to the B2B SaaS Podcast. I'm your host, Upendra Verma, and today we have Dan Balkowski with us. Hey, Dan, welcome to the show.
Good to be here, Pedro. I'm excited for our conversation. Thank you for having me.
All right, Dan. So let's try to understand how you help B2B SaaS companies, right? What's your company Product Tranquility do, and how it helps companies?
Yeah, with Product Tranquility, we help mostly high volume B2B SaaS CEOs define pricing and packaging for new and optimize pricing and packaging for existing products. And so customers will come to us to help with a couple of different things. Pricing and monetization in general tends to be one of these things where if it isn't broke, they don't fix it. And so the areas where folks will come to us for help is when it tends to break. And that tends to happen in a few different cases. One might be what we're seeing now in this new monetary inflation regime, where it's getting the attention of a lot of CFOs specifically. Not only is their funding and burn rate going down, but then they're looking at their own cost of inputs, both infrastructure and labor going up. Another big thing is when these startups grow and they start to see that they're outgrowing their existing customer segments, and their existing pricing and packaging approaches don't work for those segments. And then this will manifest itself also in either organic or inorganic product expansion. So you can imagine if a software company acquires another firm and tries to roll up, either the second product or now it becomes one among many portfolio products. It can really make a go-to-market team's head spin if they're talking to a customer or prospect, explaining the value of a product and how it's priced, and then potentially brings another product in the portfolio into the deal and has to do a 180 and start explaining, oh, this works entirely differently. Here you go. And so that can cause all sorts of friction. So those are some of the reasons that we see that companies come to us. The big thing we've been seeing recently as well is how, especially with the macroeconomic conditions, it looks like we're unfortunately heading into a recession. Hopefully it won't be too severe. Predicting the future is always risky. But what we're seeing already is a lot of companies who were benefited in the last, say, 24 months by economic tailwinds. For example, let's say your pricing metric, the unit of value you charge customer for, is based on seats. A lot of people, especially other pricing experts, will rail against how seats is terrible, but it is still pretty much the standard. So if we could have a deeper discussion on that. But just in general, if you price on seats, well, that works really well as a tailwind for your business when everyone's growing headcount. Your sales force selling a CRM and everyone's adding sales folks to their, you don't have to do anything as a go-to-market team. I mean, obviously those folks are working very hard. I'm not saying they're sitting around on their resting on their hands, but the idea is that with or without you doing much, those existing accounts are going to be adding capability and adding consumption. Well, those tailwinds have turned into headwinds now, and so we're seeing folks who their customers are going in the opposite direction in headcount, unfortunately, and I have a lot of friends who are affected by that, but my clients are also affected by that, where and they've added a lot of value in the intervening months and years where they've built capabilities into their product to help their customers do more with less, but never actually monetize that. And so they're hit with this double whammy where now they're starting to see, overall slowing growth, but then the way their pricing and packaging model has set them up to.
I want to understand a bit more about your customer base. So just help me understand what sort of clients do you work with, right? How big are they, right? So what sort of revenue are they doing, or how many employees have they got, right? Just help us understand that, client profile of yours before we sort of dive into that.
Yeah, generally, the B2B SaaS companies, more in a high volume or product-led growth approach, ideally sort of in the 20 to 50 million in revenue ARR range. I have worked with companies outside of that, though.
Got it. Right. So exactly, just can you just pick one of your recent examples, right? One of your recent clients, right? Just help us understand, right? The moment they came to you, right? What exactly did you do, right? How exactly did you sort of change the positioning or pricing in such a way that it ended up doing something good for them, right? So just walk us through one of the examples, because that would be very helpful.
Yeah, so this could get really far into the weeds. So maybe it will help sort of at a very high level to understand sort of where pricing fits in,
Mhm.
because there's a lot of different elements of the work that we do, and if we talk about the details of specific projects, I feel like we could really get lost in the forest for the trees. So at a very high level, pricing is a function of your company and marketing strategy. And so it really needs to support that. And one of the things I've found over and over again is that many pricing problems turn out to not be pricing problems. What will happen in a lot of scenarios is that I will unintentionally, because good pricing requires this, I will dig up skeletons in the closet of bad company strategy, the things that haven't been really decided. And so, at a very high level, what I usually see is companies face, four really significant challenges when they try to tackle pricing. And the first is they have an unclear target customer profile. They don't understand what customers are serving. They have a poor understanding of how they create customer value. They're unclear about their product's unique differentiation. And finally, they have a general underappreciation for the depth of decisions that go into a strong pricing and packaging approach. So we tend to think about pricing as a decision mainly around price level, and we neglect many other factors. So when I work with clients, I have built a model called the services or SVCS model for SaaS pricing. SVCS stands for the four components of the model. I promise I didn't plan it that way. It happened by accident. But the four components are segments, value, competition, and strategy. And so we always will start at this, going back to your question, like I'll always start with clients on, do they have well-defined customer segments? Because you do not price your product for everyone. You do not try to serve everyone. And this is a number one thing I see that people immediately get wrong. And the context your customers are in is critical, because that'll dictate the constraints they're facing and which value drivers they view as most important. So that leads us to the second part, which is each segment will rank order value drivers differently, which will cause them to value your product differently. And the third part of the model is competition. The different segments have different competitive alternatives available to them. Like, what would they use if your company didn't exist? So we think of those three elements as our inputs to the overall pricing process, because your pricing power really comes from the differentiated value you create for a particular segment beyond competitive alternatives available. So when I work with clients, this applies to the last 10 I've worked with, it's not just specific to one, but it's really helping them get clear on those as sort of fundamental building blocks. Again, a lot of folks like to think about very sort of what we call last mile aspects of pricing, which is like, oh, should our prices end in nines, or should they, or should they end in zeros? It's like, okay, well, those are fun conversations and they can have an impact, but if you're focused on that, you're really looking at the wrong end of the stick to start with.
All right, so Dan, so I've got a question here, right? So let's just say I'm like under 10 million or $10 million in ARR, right? So is pricing that big a deal for me? I mean, what I could just do is, okay, I just could look at my competition, look at their per se pricing, right? Maybe look at pricing that they have for typical add-on features and all of it. Isn't it a simple thing for me to worry about, or is there something that I'm missing out here, especially when I'm under $10 million or something like that?
Yeah, so it's a great question, and I think you're on to something. So I will actually tell companies that are under 10 million ARR, pretty much that. It's like they've got. If you think about the model I just outlined, right? A lot of it comes down to understanding what is the value, and specifically the differentiated value you provide for specifically groups of customers, and companies that are at the scale that you mentioned, they're still really on a value journey. Like, they're still really trying to figure out, like, what is the problem we're solving? Like, is there a market here? And trying to create a repeatable model that they can go and find customers for that problem and actually deliver any value. And so monetizing that value, it just, at that scale, it really has to be good enough that it's not significantly getting in the way, right?
Mhm.
It doesn't have to be amazing. Does that help?
Yeah, exactly. And when exactly does it really start mattering? And when does it really have an impact, right? Let's say I've hit $20, $30 million. Should I really rethink my pricing? And if yes, why? Why can't I just follow the same strategy? Why can't I just look at my competitors and just come up with a simple strategy? Why is it so tough? Why do I need an expert like you to bring in and, sort of, deal with all of these things?
Yeah, it's a great question. So I'll take it. There's two very different questions there. So let me take the first one first. So yeah, when you hit sort of that 20 million ARR mark, there's a few different things that have happened, right? You've got to a point of scale that there's there's enough hands in the business where it's not purely about just chasing the next dollar of revenue, right? Things do tend to get a little bit more strategic, right? Where before that, it's like, well, if it's not about next month's sales numbers, like I can't really pick my head up to think about anything else. So and not to say that companies as they hit that point don't have a ton of problems that
Yeah.
demand daily attention. But it does tend to have a little bit more of a ability to be like, okay, what do we really need to get to our next stage of growth? And the impact, really is clear at that point. At that point, you sort of hopefully have a clearly defined customer segment that you're going after. You understand the value, and now it's a matter of like there's a lot more options available to you to really use that as a lever to drive increased growth. And you know, I've seen tons of benchmarks and I've seen different results from clients. They could be, I think the standard would be accelerating 20% ARR, easily, sort of on a sustained basis. But I mean, if you really sort of nail it, I mean, it can be multiples of your ARR acceleration from a price change. So at that point, it's pretty much a no brainer to make those changes. Um,
So should you just increase the prices at that point? Is that it?
Well, so this goes back to my previous point, which is I think people get really enamored with pricing and packaging where they focus purely on the price level. So there's so much more to pricing and packaging than just the price level. Again, should it be $19 a user, or $99 a user, or $29.95? Those are fun, interesting conversations, but they're sort of, if we especially think about a B2B scenario, those are ultimately it's the easiest thing to change. What tends to be much more important is the elements of packaging. So packaging is really like, it has four components in a SaaS world. So it's your price metric, the unit value you charge customers for. So that could be seats or API transactions or amount of data stored or transferred. You've got your price model. So is it a perpetual transaction? Is it subscription? Is it pay-as-you-go, utility-based billing model? Is it hybrid model, which is very popular these days? Is it your offer configurations? Usually in terms of we see good, better, best. And I believe it's about 70% of SaaS companies use some type of good, better, best package offer configurations
Mhm.
these days. And then finally, your price structure, price fences. So this is how do we give two different customers, how do we charge them different prices for respectively the same product? And we see this all the time in a B2C context. Like if I go to a matinee showing of a movie at the movie theater versus the evening show, right? That's based on time. We have a similar thing. If you call the salesperson at the first day of the quarter versus the last day of the quarter, you're probably going to get a
Yeah.
different discount offered to you to close the deal. And there's others based on time and volume as well. So those four elements, right, along with price level, this is where the multidimensional nature of it really gets complex. And this is where, yeah, I think I've been thinking about recently is that it's really difficult for companies to drive this conversation internally. Going back to your other
Mhm.
comment of like, well, why would they need someone from the external to help you? I wish there wasn't. I mean, I'm all about trying to educate people on this. I feel like it'd be like trying to describe or paint a sunset if you only had the language of primary colors. Like when people only think about pricing in terms of price level, it really limits the ability of a CEO to drive uh, a really in-depth, practical, and beneficial conversation around pricing and packaging, because then it just, it's like no negotiation you should ever make one dimensional, right? There's always multiple things you could offer, right? I got talking to the car salesman right? He's saying, well, car's 20,000, right? I want it for 18, right? It's like, well, you can throw in the rust coating and I want the extra, the heated seats, right? You want to make these multidimensional, and I really feel people do themselves a disservice when they don't really understand all the elements that
It's
go into
not
it.
that simple as I might have thought of it, right? So it's way too complicated given the sort of models and data points in there, right? So yeah, got it. So one question, Dan, that I typically hear from founders, right, especially under $10 million or so, right? So they want to increase prices because they see that their product really adds that value, right? But they're worried because they've got tons of customers already out there. They're worried that they might lose all of those customers, right? So how does one go about executing this price increase, right? So how does a founder think about it, and how does a founder execute it without actually sort of taking a big hit?
Yeah. So I think one of the things that really I work with executive teams front and center to get aligned on is, what is the goal that you're trying to achieve? Because there's many goals floating around a company, and unfortunately, if all the executives have different goals in mind, whether that's customer lifetime value or decreasing customer acquisition costs or increasing ARR or increasing profitability, generally, I will push people that a good price maximizes long-term profitability. That's like a proper pricing goal, but you may be at a different stage where you have a different North Star that's more appropriate. Uh, and it doesn't matter. Like, we could bring back the best pricing study in the world. If people aren't aligned on the goal, all they're going to do is attack the data that you bring. So getting people aligned on what are we trying to achieve first before you go do any research is huge. So I think, to give you more tactical, I think two things that founders need to really evaluate for any pricing decision, like, what is the difference in expected revenue and what is the difference in costs incurred? So costs could be like you're losing customers due to churn, or could be costs incurred because, hey, we're trying to go do willingness to pay studies, right? And those are going to cost things. And we have engineering has to change entitlements, and our subscription management system needs to get updated, right? So those are going to be all costs, right? And then you're going to have some idea of, hey, what is expected revenue? And just the level of, for better or worse, I tend to not see at least even that level of business case done of what do we think things expect to change. And one thing I've seen, I saw a stat on this, is like over 50% of SaaS companies have never tested or piloted pricing, and 13% have only done it once. And 6% have only ever actually done pricing research on buyer needs and willingness to pay. So, if you want to go down this path, like, first, again, assess whether or not your goals are in line, what you're trying to achieve, what do you think your expectations might be, and then a couple of things, like, I wouldn't just blindly raise prices. I wrote a really extensive blog post on pricing during inflation. Overall, like, it might be a good time to raise prices if generally you don't see pushback on pricing. There's a good rule of thumb that you should see about a third of your deals lost according to price, and if it's below that, like, you're probably priced too low. You should be seeing some pushback on pricing. If customers actively tell you how cheap you are, if you have demonstrable proof that you create a really good ROI, if you haven't touched pricing for a couple of years, it's probably those are all probably really good reasons for you to go forward. And so then it's a matter of, what is the risk appetite of companies? And I see this really in dramatic fashion from client to client, where companies, different CEOs, some CEOs are just cowboy, whatever, like, we'll just make the change and we'll see what happens. And some people are like, no, we need, this data. We want this, we want our FP&A team to model it to the nth degree. We want all these scenarios. And then we're going to inch, prices forward, over time. There's a lot of different elements of this, and so a lot of it is cultural, depending on the risk tolerance of the company. But generally, it's a good idea to plan through announcements and timelines for changes well in advance. New and existing customer price changes can be different. Like, if I change the price just for new customers, that's, in a certain sense, it's not really a price change, because, like, those people didn't know what the price necessarily was before. So you could handle that very differently. And depending upon the level, right, there's ways where you can You could do a whole bunch of things with packaging, but one, if you realize, like, say you go through a pricing study, you realize like we're 3x below where we should be in a market, and you don't want to make that jump in one go. You can plan, sequences of price hikes. So generally, a rule of thumb, can be like don't increase more than 50% in a year. But and then there's a whole other discussion of should you grandfather people or along
Dan,
without
so
this.
if I'm a founder, right, and if my North Star at this point of my company is to just, grow my top line, right, just increase that ARR metric, do you really think, thinking and spending time on pricing is going to help me reach that goal? If that happens, I think everybody is going to do that. But for some reason, people believe that might not be happening, right? So, I mean, why should I touch pricing? Maybe that will end up, losing, I might end up losing a bunch of customers, and then it's going to hit back a lot of things, right? So is there any direct correlation between, sort of thinking about the whole pricing and, your top line growth? If that happens, then maybe people will start caring about it. So do you think there's a correlation there?
Yeah, I mean, pricing is probably the most high leverage thing you could do to grow your company. Always a big mystery for me. I have hypotheses why people don't touch it. I think number one is it's very difficult for managers to see opportunity cost. So if I have an AWS bill that comes every month and I see how much that's growing, it's like, oh my God, I got to have my VP of engineering take a look at this and get our infrastructure costs down. But if you're supposed to be selling your product for $100 a seat, instead you're selling it for 10, that $90 doesn't appear on your P&L anywhere. It's just gone. And so it's out of sight, out of mind. And so I think that's maybe one of the mindsets that, I'd like to see change. And I think also, look, pricing is an art and a science, but it's much more of a science. And you think there's a lot of risk. Of course, you're not going to touch it, but there's ways to approach all those
But I
elements.
think it is hard to sort of, quantify that impact that I'm gonna, take as a company when I sort of increase the prices, right? For example, if I'm just saying, okay, I'm gonna increase per seat pricing by just say $50, it's easy to say, okay, if my number of customers are gonna remain the same, my overall revenue is going to increase by 50%, but I'm not sure how many of those customers are gonna go back, right? How many of them are gonna churn out, right? So how do I even calculate that number, or how do I even estimate that number, right? Because I think that's where people are struggling with it, really. Because if you can give me that number, why would I not increase the prices, right? It's pretty obvious for everybody, but because doing that is very hard, because you'll have to deal with real customers churning out, right? So how does a founder sort of deal with this? Because that, I believe, is the biggest and trickiest problem.
Yeah, I mean, look, the methods of decision analysis are not, solely the forum of pricing people, right? I mean, if any major public company CEO, if I'm the CEO of Intel and I have to decide, am I going to spend $10 billion on a fab? Right? There's a lot of things I have to understand to know if that's a good investment, right? So look, there's elements you can get to with a spreadsheet and good FP&A teams, right? There's elements you can get to with really good market data, right? Marketing research that we can add to that. And there's elements that, it's very rare that the executives in a company don't know anything. Right? I think this is the number one thing I see with measurement problems is people are like, well, it's so ambiguous, I just give up, right? And it's like, well, no, you have a sense. You have a sense because you've made changes in the past and you've seen how customers react, right? And we haven't really talked. I know we're running out of time, but in terms of even like rollouts of changes, right? And this is affecting both messaging and to a sense the magnitude of changes that you might have. Like you can do targeted rollouts, right? Say by geo, right? Where it's like, we're going to roll this out in only, a part of North America, right? Versus worldwide. Or we're going to notify a segment of customers who we're pretty sure are happy with us, right? Either because their NPS scores or their usage metrics, et cetera, right? And we're going to even drip out our announcements to them, and we're going to test how many angry emails our support staff gets, right? And like, but again, right, like you'd approach A/B testing, hypothesize what do we think is the worst case would happen, and what would be okay if because look, every time you touch pricing, even if it's to lower pricing, you will get people to churn, right? Because it's forcing people to become aware of like, oh, we have the service, do we really need this, right? It doesn't necessarily relate to the magnitude or the fact that you increase prices at all. So there are ways to go about this, and I know we're running out of time, but
Yeah, I think testing at a smaller scale is the key that you're sort of getting at, right? Yeah.
yeah.
Got it. All right, Dan, thanks for taking the time to talk to me. It's a wonderful conversation on the whole SaaS pricing. Thank you.
Thank you for having me, and hopefully it's valuable for your listeners.
Thanks for watching the B2B SaaS Podcast channel. I believe that the best way of building SaaS companies is by regularly talking to real founders who are out there building their companies. These founders have gained tons of insights during their journey, and I'm here to bring those to you. So if you want more such stuff, please make sure to subscribe to the channel here.